Okay.
That's one of the best fucking movies.
Right.
What is up, everybody? Thank you for being here on this Saturday night. While Kris sets his stuff up, read the disclaimer. We are not financial advisors. We have no idea what your situation is. Please do not take anything we say too seriously. And always do your own due diligence. Make decisions that are good for you. Just because we may be bullish on something does not mean we're going to be right. And with that said, you blot that shit, Kris.
That's right, bro. You don't buy full price on anything furniture related. There's always this huge markup that comes with furniture.
You know,
get the deal.
I must say, I'm a little disappointed.
Why?
Because there is no way you took what I said seriously.
No. When you sent it to me, I looked at it for like a few minutes. I asked my wife if we can go, and she said, no, I don't want it. I was like, okay, cool, man. It's fine.
I'm going to let her know that you're blaming her that you guys didn't go.
No, she'll tell you. She just doesn't like it. So I was like, all right, what am I going to do, man? You know, but I like what I got. Like we both liked it. We went to,
as long as you guys like it, that's all that matters.
I know it sounds funny, but basically what happened was we went to Ashley. Well, first we went to this shady neighborhood because I was like, well, first let's check out the outlet, see what kind of stuff that they have, right? Because look, for anyone who buys furniture, y'all have to know that there's a couple of things. Number one, the markup on furniture is high. It's huge. Usually like 200, 300% what they buy it on wholesale prices. So when you buy retail, you're buying 200% more. So if they got it for 300, they're selling it for probably like 900. So it's just letting you know that that's like the first thing. The second thing is most of the furniture that's out there, whether you go to Rooms to Go, whether you go to Ashley Furniture, a lot of it is coming from the same source. Now, Ashley Furniture actually like has their own factories in Missouri, which I want to support local American manufacturing. So we wanted to go with Ashley. Now, the thing is, before that, I just wanted to see what was out there. And so we went. I said to my wife, just look around, see what you like. And we kind of came up with the things that we both wanted. And, we went to Ashley and we actually liked the couch that was there. And they were just like, oh, yeah, it's going to cost X amount of money and it'll be delivered in like a month. And I was like, look, first of all, I'm not trying to pay full retail. Like, you better give me some kind of like family and friends discount or something. And the guy was like, no, this is like the Memorial Day sale, blah, blah. I said, okay, cool. And then I was like, let's go, to my wife. I grabbed I grabbed the price quote and I'm like, okay, we got to go to the source. She's like, what the F is the source? I'm like, trust me, we're going to find it. I don't know how we're going to find it because no one's going to tell you like, hey, this is my source, but I'm going to find it. So we started driving around and I was like, oh, look, babe, there's Asia. Like, when you go, that's the other secret. Like Asians, they own a lot of these like independent retail, like furniture stores. So I was like, okay, look for like Chinese signs. Like if you see Chinese signs and like furniture, that is where we got to start looking. And if you see like moving trucks, like, the white vans with the big ones with the loading docks, I said, look for that. So then we eventually found something. The first one we went to was like, I'm talking about, that was shady. Like that wasn't even slightly like legit. That was shady as hell. There were people like unloading. I'm pretty sure that most of the stuff came off of the back of a truck. And I was like, we're not doing that. Eventually we found the right place and it was like this old Chinese grandpa. And I was like, okay, like, what do you have? And he's like, okay, I got this. Like, I'm a distributor for Ashley. I'm like, oh, you're the guy. Like, that's my guy right there. And he's just like, look around, tell me what you think. And I'm like, okay, I like this one. Right. And he's like, okay, it's going to be this much. And I tried haggling a little bit because, I'm Indian. Got to try to make it a deal. Right. And he's like, no, if you buy like the 3-piece, like I'll give you like $50 off. And I'm like, bro, I don't need the 3-piece. I just need the 2-piece. Why don't you just give me the money off? He's like, nah, bro, I can't do it. I was like, all right, fine. Like he's not G'ing me like Ashley was. So I was like, all right. He's like, okay, I'll do you one solid though. Like if you get cash, I won't charge you any tax. I was like, bro, we pay a good amount of tax here in the city. I mean, in Atlanta. So I was like, okay, cool.
I'm with that.
Went to Chase, got the cash, paid the guy. He's like, listen, my delivery guy, he'll have it to you in an hour. $30. I'm like, cool. Got home, the guy comes, and I'm like, okay, he came with a dolly, came with his own truck, took care of everything, came, put everything together, took all the boxes, all the the wrapping, took all that shit back, gave him 60. I'm like, here you go. Here's double, as a nice tip. The guy was happy, I was happy, and now I got a nice pair of couches.
I will tell you, never again will I assemble something from Lovesac. Never again.
Never.
I should have paid, or I don't even think I asked if they did assembly. It took us, the picture I sent you, it took us so long to put that together. And it's not like it was hard. It was getting everything in the covers. But I will tell you, the most comfortable thing I've ever sat or laid on. It's insane.
Yeah. First of all, some people are saying it's tax fraud. First of all, it's not tax fraud. It's the seller's responsibility to collect the taxes and pay. My agreement with him was $800. So wherever he gets his 8% to pay the state of Georgia, that's on him. Like the buyer is not, even though it seems like it, you're not the one that's technically responsible for collecting that sales tax. Like you don't go to the store, you buy something and you're like, okay, I bought something for $100. I better send Georgia a check for 8% of what I just bought. Like that's not how it works. Like it's the seller's responsibility. So however this dude wants to claim it on his taxes, by all means, it's up to him to figure that out. So,
all right. So we have news from the Donald. Did you see the news from the Donald?
Yeah, about like them negotiating and probably getting. But the thing is, like, I also saw news that like the other side is like denying it.
Like I said, I don't know who the hell they're negotiating with. I have no idea. If we get a gift for Memorial Day, I'm going to tell you right now, if on Tuesday, Wednesday, and Thursday, we actually have full usage and full passing through the strait, keep in mind, everybody, I am saying if oil's going under 80 by Friday.
It's very possible. It's very possible. You could definitely see the collapse in forward contracts. Like that'll be the biggest indicator. But remember, this is a 30-day window where,
correct,
another 30 days. So you may or may not see that 80 mark. I would hope that we see 80. Like I would like to see 80.
I'm trying to be realistic. We're at 96.60. It looked like we had it when we looked like we had a deal a couple weeks ago. We went from 104 to 88 overnight, around that area, and then it shot back up. If we actually get this signed off on, and if it actually allows ships to pass through for a couple of days, I think we go just under 80. It's going to take a lot more to get us under 70.
Yeah. I mean, you're going to need a sustained level of, crossings to get to that same level. Like you're definitely going to need a lot more crossings to happen. So, I also think that unlike the spike that we saw where things just kind of stopped, the time delay that it takes for inventories to kind of rebuild and make its way through the system, it's going to be there. And then not to mention, like, remember, there's still uncertainty. Like, this is not Donald Trump going to Tehran, sitting with the president and signing like a treaty.
No, who the hell is he negotiating with?
Yeah, this is like a measure of understanding. Right. So as much as I want to be super bullish on the news, I also know that this is not the same as a full on 100% deal. The other thing is the Israelis, they weren't too happy about it. They like Netanyahu, I think, said that if anything, we should hit him harder. And I was like, okay, so we'll see what actually ends up happening. This is not as simple as, okay, it's one and done. And not to mention the market's been tricked so many times with this, oh yeah, we've got a deal thing. I don't even know if the market really trusts it right away, So maybe $80 could happen for sure. So we'll see. But like I said, I think it's going to be a lot more gradual of a step down. But that doesn't mean the market's not going to rally off the news, though.
Yeah, the market will rally. I think that we are going to see some type of a deal. This has gone on for too long.
Yeah.
I look selfishly, forget the market, forget
Mhm.
the S&P going up. I don't want to see the U.S. and Israel bomb utility companies. I don't want to see 92 million people without power. I just don't want to see it. So
Yeah.
I'm really hopeful we get a deal very soon.
I think the challenge that people don't understand is that let's say we did attack Iran, right? And we knocked out the current leadership and blah blah blah. We did that with Iraq, and what happened? We got ISIS, right? You always have to remember that the devil you know sometimes might be better than the
Yeah,
devil you don't know. And the thing is that region itself has a tendency to go into like authoritarian mode. And you've got the Taliban on one side, and you've got all these other groups on the other side. I mean, I'm not a fan of the Iranian regime. I'm not even trying to like justify them, but a lot of times when you take these strong men out, the alternative that you get tends to be a lot worse. And so from a stability standpoint, if we can come out of this with a deal on the nuclear side where they agree not to enrich for a prolonged period of time, they agree to becoming a better steward of like geopolitics, you know, we could go back to the status quo somewhat. I do think that getting getting time is probably going to be the biggest thing, because at some point, most of the countries over there, Iraq, Bahrain, everyone is going to be shifting their oil to other parts of the Middle East, like, transits. They're not going to rely on the Strait being used as a hostage again. And the thing is, all you really need is time. Like if you look at the UAE, they already have a second pipeline in construction, halfway done. They're like, look, we're not playing this shit, and we'll double our output. So you've got that. You've got demand destruction from around the world. There's talks about putting a second pipeline through Saudi Arabia, through
to go off the
the
other
Pacific.
side. Yep.
Yeah. So the thing is, like, even if the Strait does close in the future, I don't think that there's going to be nearly as amount of leverage when it comes to.
Oh, they're
That,
going to build a
you know,
backup plan in case this happens again. There's no question about that. But what I'm
yeah.
about to say is going to make you very happy.
Okay.
I'm going to predict that now, keyword everybody, if this happens and if oil goes under 80, my prediction is capital comes out of Exxon, Chevron, Occidental, Conoco, BP, all the super majors,
Mm-hmm.
flows back into technology. And you know what companies I think it flows into?
What companies?
Software, baby.
I already see it. I see that trend already happening. But the thing is, it's a measured resell. Not only is a receleration, but it's a measured capital flight that's going to come. There's also a lot of people that are rotating out of hardware and semis, not at the level that like everyone thinks that is, but smart money, in my opinion, is saying, look, we've gotten to a level in the semis where it just makes more sense to buy the undervalued SaaS names that still have strong cash flows that are actually going to benefit from the AI wave, and they're going to start deploying capital there. So I think SaaS, by next year, everyone is going to be like, oh my god, like, where the hell? Like, I I am so glad. I want to thank Steve personally right now for doing something. He showed me how to use Claude Code
Oh, I
to
wasn't going to
build.
bring it up if you want to go down the
No,
rabbit
no,
hole.
no. He showed me how to do stuff on Claude Code, and I've been vibe coding for literally the last 2 days. Like, I didn't even sleep that well last night. I was just like, okay, I can do this, I can do that. This is gonna be good. This is gonna be that. But while I was doing all of this stuff, and I actually built something really nifty, and I'll show you guys what it looks like. I realized that I have no clue what I'm doing. This is not something that I can sell to the enterprise. This is not something that has all the bells and whistles that you need to be compliant with all the laws and regulation that you need, and depending on which industry you're working on. The other thing is, it still hallucinates a lot, and you have to actually pay for a lot of that compute. So you can't just, it's not as simple as, okay, just tell Claude what to do and it just gets built. Like, no, there's a lot of work that goes into it. And even when everything is running, if there's a bug, if there's a problem, you're spending your time trying to do all of that stuff. So I think there are plenty of software companies that are going to be able to kind of utilize their platformization and their relationships with existing enterprises to basically allow for agentic features, but they're not going to get replaced. There are definitely going to be some companies that, that are going to go bye-bye, but as far as I can tell, no one can vibe code away 10 years of relationships, or 10 years of reliability, 10, 15 years of guaranteed success. A lot of people think that overnight people are just going to switch away from ServiceNow, from Workday, from even Salesforce and Adobe. Adobe is a little bit more of a threat just because it's more consumer facing. But if your main business is vertical SaaS and you're integrated into like the enterprise, like me using Claude Code made me realize just how powerful AI is, but also how limiting it is. I did also realize another thing. If you're an incumbent and you use this AI, you can speed up your development and actually reduce your margins a significant amount because you don't need as many people to maintain everything that you did before. So I think AI is actually going to be a pretty big tailwind for a lot of these SaaS companies, but you have to be very selective. It's not just going to be, it's not just going to be pick one and that's it. Like you'll be fine. So
yeah, the biggest thing with it right now, and look, I know that I know next to nothing. I may have built something that works for me and that's cool, but everybody, I'm not going to say everybody. A lot of people have asked if I would make it public, and the answer is no. I don't want to be an IT department. I don't want to have to fix things. I don't want to have to build new things. Like it's for what I want, and I'm willing to pay for the information to come in for what I want. But Kris said something very important, and I've been saying this for a while, and I'm going to extrapolate on it. If you think that Victor and Johnny in IT is going to vibe code something, and the company is going to use that over an enterprise software platform, you're mistaken. Now, I'm not saying that you're not going to vibe code things to get rid of little software. I think single point software is screwed. And I think that you can vibe code away certain things. I think you can utilize AI to build certain things for your team. That's not even a question. Absolutely you can. But most people have never heard of a SOC 2 report. Most people have never heard of a third-party vendor assessment. You have to do these if you are a large-scale company. Every big company has auditors that come in, especially IT auditors, and they want to see the security and the controls with warehousing data. And vibe coding, you cannot do that now. Now, maybe in 5-10 years, it'll be a little bit different, but right now you can't. And to think that ServiceNow, Workday, even Adobe, Salesforce, to think that they don't have access to better models than us. And let's not forget, even if they don't, they're on Opus 4.7 like us. They have the token budgets and the software engineers to build stuff that is so much better than what we can do on our own or what a group of us can do. And they are going to do exactly what Kris said, utilize their economies of scale and make their product so much better. They're not starting from ground zero. They're already starting with an established product. They're going to make it infinitely better. So I think there's a line in the sand. Everything on this side is going to be fine, and everything on that side is up for grabs. But I don't think ServiceNow, Workday, Salesforce, I don't think that they're in trouble. Adobe, I think Kris is right. Look, their numbers are the best out of all of them from a compelling aspect. The problem is, do you need an Adobe account for the Creative Suite anymore? I don't know.
Well, the thing is, we need to break down Adobe a little bit further too, because Adobe is not just, and I think I made a mistake by saying it's consumer focused, right? Like, yes, there's the average person that uses it.
I mean, Acrobat.
But,
you got
no. That's fine. That's fine. I'm saying the first thing is Adobe in its consumer segment already has competition. They've got the competition from Canva on one side. They've got the competition for Figma for a lot of design work on that side.
Nitro is a
Right.
huge product for PDFs.
Right. Then you've got competition from Sony, Sony Vegas, and what's the other one that's like really big? DaVinci Resolve. So it's not so much that Adobe can't compete and can't compete effectively. It's just it's much harder for them to basically compete against all these other people. And now you've got this entire wave of AI things that are happening. So where back in the day you could have gone to like if a person on Fiverr, and I'm sure you did it, I did. You wanted to design a thumbnail, or you wanted to design a logo, or whatever. You would hire someone from Fiverr, and Fiverr. What do? They go on Adobe. They create the thing that you want. They would sell it, send you rough drafts.
They give you 3 options. I used them like 4 years ago.
Yeah. Right. And you got yourself a product, right? The problem is now you could just go to Gemini and create me a logo with X, Y, and Z and do it 100 times and it'll create something that you want. You want to create it in high res, you can create it in high res. So I think a lot of creators that were using the Adobe features to kind of tailor that, those people are going to have some trouble, and we'll see what happens. And then on top of it, I'm sure that there are other things that Adobe is going to do to try to monetize this
that was one
AI
shot.
wave.
That was one shot.
Firefly. Yeah.
I just told it what I want. I threw in our pictures, and this is what it made me in one shot.
Yeah.
Like
imagine trying to do this before. It would have been much more difficult.
6 seconds it did this.
Yeah. So, it's just one of those things. Like, I don't know how big of an impact it's going to be. The one good thing about Adobe, though, is that they do have a lot of proprietary images and a lot of proprietary stuff that they've trained their models on. So for any work that's actually like creative focused, that's like towards not personal use, but actually business use, they have a little bit of a moat in that because all of their stuff is trained on IP that they already own. So it's not like you can create something and in the future get like a challenge from like a legal authority saying you basically trained your model on this specific thing, and because you use this image which is basically been trained with something that didn't get permission, that could be a liability. So Adobe does have a little bit of angle on that. They have their own models in Firefly, and they are going to like a consumption based system where if you have like something you want to edit, you can just ask and prompt your way through the process. So I don't know. We'll see how Adobe does. But the other problem with Adobe is that they also have a leadership vacuum. Their CEO just left after being there for like 20 something years. I mean, he's going to still be on the the board of directors, but there's leadership uncertainty at Adobe as well. So I think Adobe should eventually recover, but I'm not banking on it versus these other companies that are just way too oversold. Like a ServiceNow, I think is probably the easiest one of the bunch to say this is not going anywhere. They've got strong cash flows. They've got a dynamic leadership. They've got a plan already on how to actually hybridize their business model to make sure that they're capturing the value of both the subscriptions and at the same time the additional usage that they're going to get out of their agents. So like I said, I would, if I had to put my money on number 1, 2, and 3 in terms of where the SaaS recovery is, number 1 recovery is probably ServiceNow. Number 2 recovery is Salesforce. And number 3 recovery is Workday. Intuit may be a little bit of a challenge, but even Intuit could eventually recover.
Yeah, Intuit is interesting, and I agree with you. And I actually agree with the same sequence. And the reason I put ServiceNow above Salesforce is because their growth rate is expected to be significantly more. And I think in this market, that's going to matter. Intuit's interesting because do they become, through TurboTax and through QuickBooks, do they become the company that absolutely destroys and cannibalizes the accounting industry? I don't know. But in 5 years from now, with how good AI is today, are the vast majority of people going to actually need accountants? I'm not sure.
Yeah, I mean, honestly, if I was the CEO of a bank, I would say to people, listen, we will create a situation for you where you spend your money utilizing this card for your personal self and this card for your business, which pretty much everyone does right now, where you have
Yep.
your business expenses, your personal expenses. And you basically get at the end of the year, you just upload your W-2 to them and whatever business income, and they do all this stuff for you. They look for everything and they just utilize AI, and they just basically, they don't charge you anything. And that's the shtick to keep you engaged in their banking platform. Because then what happens is, oh, I've got 5 years of credit history and I've got 5 years worth of tax history with these guys. I can't move that over. So if I could get all my taxes and everything filed directly from my bank account, like, the bank knows everything. Like,
Doesn't it surprise you that we don't have that already? Especially go a step further. If you're JP Morgan Chase or Bank of America that owns Merrill Lynch, or Wells and you do your investing through Wells, if you have your whole financial life through one of those institutions, why couldn't they do your taxes?
Yeah. Exactly. I mean, if you have your investing accounts with them, you have your retirement accounts, you have your mortgage through them, you have your, all of your pay stubs are going to be coming into that account. I mean, all they really need is your W-2 and like whatever, like 1099K or whatever, or 1099 MISC. All you need is those. And I'm sure that like
if they're your brokerage,
yeah,
they already get those because they're issuing those to you. So it would really be if you do any 1099 work for any other organizations, which is really fast as W-2.
Most people don't have that anyway. 90, I would say probably 90% of people, they just get the regular statements.
Yeah. A lot of people's taxes are not that complicated.
Yeah. Yeah.
It's definitely a step where over the next 5-10 years, we could see that entire industry change. It's going to be interesting.
Yeah. Right there. My next year will be 20 years consecutive with TurboTax. That's great. That's nice. Yeah.
Yeah. If you can get away with using that, do it. I mean, I don't know that I ever could. My accountant already wants to kill me with all the stuff I have to give him. So,
yeah, my accountant's cool though. Like me and him go back and forth with like stocks and stuff like that. So, me and him, we grab lunch every other Thursday. So
my accountant's one of my best friends. I mean, he's like, you can't consolidate all this for me. I'm like, Brian, what are you doing?
Yeah. That's the two things you honestly need in life. Like
an accountant and a doctor.
And a lawyer. Three things: a good doctor, a good lawyer, and a good accountant. If you have those three, that's like the trifecta.
Mm-hmm.
Because anytime you have problems, most of them are either going to come from money, they're going to come from health, or they're going to come from or the law, and that's it. Yeah.
Dude, we're trending on X.
Are we?
Well,
no way.
Me and Amit.
What are you guys? Oh, with the basis points.
Today's news. SoFi, like, check this out.
Yeah.
I'm still shocked that this is.
That was a really good episode, by the way.
SoFi CEO Noto shares frustration and bold vision for $1 trillion future. Under today's news for X.
That's good. That's good. He was very candid with you guys, which is kind of cool to see.
I've never heard him be like that in all the interviews I've listened to.
It makes me kind of want to buy SoFi just because I want to support that guy. I don't know. I don't really like, there are people right now that you kind of want to bet on, not necessarily because the numbers work really well or this or that, the other thing. You just kind of like feel like, oh yeah, this guy's like, I could see myself get a drink with this guy. Like he's a safe bet in terms of like putting my capital with him. So I'm going to have to be a little bit disciplined and wait until SoFi gets to my target, about $10. But even if it gets to 12, I might start buying just because I like him.
Yeah, I mean, for those of you that are not familiar with his backstory, he went to West Point. He was in the military, did communications for the Rangers. He came out, went to Wharton, I believe, was an exec at Goldman Sachs, left, became the CFO of the NFL, went back to Goldman, then left and went to Twitter because he was one of the people on the whole Twitter thing at Goldman, became the CFO of Twitter, and now he's a CEO of SoFi. So this is a guy who only knows how to win.
Yeah.
And it was very clear to me. I mean, there's an interview from 6 years ago that was the main thing that got me interested in SoFi. And I don't know that any other management team could have managed their way out of the situation that they were in. I actually think the pandemic was a blessing for SoFi because it made them vertically integrate and expand adjacently at the same time to get away from just being a student loan company. And I have no idea what the stock's going to do. I have no idea if it's going to go down or up. I do think it's going to get bigger. I do think the tangible book value will grow, and I do think their earnings will grow. So I am very long. Now, who knows how long it's going to take?
There's only one pushback that I would probably give to Noto, in that the US banking environment is very, very competitive. Like, there are just so many banks all over the place. Now, over the last 10, 15 years, it's been shrinking. You know, the footprint on most banks, like the number of banks in the US has consolidated, but it's not to the same degree that like some other countries are. Like, if you go to Canada, I think there's like 4 major banks.
Yeah, it's like TD, Bank of Nova Scotia,
Royal Bank of Canada,
Royal
and I think there's like maybe one more. So the thing is, like, the amount of competitive pressure that's probably on SoFi is immense. So to get a crazy high multiple, it's probably very difficult. Like, to get like a JP Morgan like multiple is going to be difficult. Now, that doesn't mean they can't get it. You know, it just means that it's just a very big uphill battle. Not to mention, JP Morgan has so many diversified avenues of capital, and not to mention, because of their scale, they're able to kind of extract a lot of deals, and they can avoid a lot of deals that the smaller guys have to do. So as an example, like JP Morgan, they can take on, you know, huge deals. Like, you're talking about like $20 billion build outs on certain things. They can do that. SoFi doesn't have that capital to do that. So SoFi has to go into more personal loans, which tends to be riskier. Like, don't get me wrong. Like, I think SoFi does a great job, you know, taking care of its loan book. But the thing is, in terms of like risk pools, SoFi has to go into the higher risk pools just to make that same margin that JP Morgan does. But JP Morgan can do it at a much safer pace. One, because of their big ass scale, and two, is because they have those controls and they've always had them for a long time. So I don't know if you can really say that they could get to a JP Morgan like multiple. It's possible, especially if they keep up their growth. But just from the risk standpoint, they are lending into a riskier loan pool than something like JP Morgan. So that's my only thought on it. I think that from a business standpoint, the one benefit that they do have is that they don't have any physical footprint. You know, or if they do have a physical footprint, it's probably just like their corporate offices and stuff like that. And maybe
they don't have branches. I think
they don't have branches.
A lot of things over the next year. And it's going to be very interesting to watch. I have no idea. Like, I can't speak on if it's risky or not. I mean, I know the FICOs and the dollar amounts, their cohort, their charge-off rates are incredible. So
yeah,
I think that this is, I'm going to make a full video on my thoughts. I don't want to really say it here, but I'm very long. That's all I'm going to say.
He is, I think he did do a good job in communicating that they don't want to just be a bank. They are trying to make sure that they're diversifying their income streams so that they do get more of a tech multiple. So when the conversations came around with the crypto stuff, I thought, oh, that's interesting. You know, that's a good segue. Like, because the thing is, the more lines of business that you add that are non-banking, straight banking related, the more money that you could probably, or at least the bigger the multiple that you can demand from the market.
Yeah, I don't think people realize how big SoFi USD can become.
Yeah,
I think it's going to become a huge business for them.
I also think one of the things that he mentioned was absolutely correct, in that if it was just a SoFi thing, you could sort of understand it and be like, oh yeah, this is like SoFi being under. All of fintech is down, so it's not just a unique thing to SoFi. I mean, you look at some of the other companies that they're down too. All of fintech is basically bleeding right now. So
we're gonna see what happens if CME Group flips and they start pricing in a cut. I mean, I'm expecting CME Group next month to change their targets quite a bit, but we'll see.
Yeah, I'm actually quite bullish on NuBank, to be honest with you, compared to SoFi.
A lot of people like LATAM and they like NuBank for it. NuBank's down.
Yeah. Well, I'll tell you a couple of reasons why I like NuBank. Number one, they have growth vectors in some of the other Latin American countries that whatever they were doing in Brazil is working there. So you've got Mexico, you've got Colombia. I'm sure that they'll expand to other parts of Latin America. So, those are growth drivers. They're expanding to the US. There's a large expat community here in the US, from LATAM. So you can kind of like connect the two communities together and basically a lot of people with South American backgrounds here in the US. In terms of like tailored banking solutions, I think a lot of American banks haven't necessarily given them the same level of white glove treatment. And I think those are easy pickings for NuBank to pick up on. As an example, like NuBank has like a native Spanish application that they can have, right? So basically, right now, if you go to Chase, I don't know if there's a Spanish version of Chase, or right now TD Bank, like I have TD Bank because it used to be Commerce Bank, they bought it. They don't have like a Spanish version. Now, here's the thing: if you're a person in the United States and your English is your second language and Spanish is your primary language, you're going to gravitate towards that. And you're a banking client. You save money, you put your money away, and so I think they're going to lean on that, and they're going to lean into that Latin American diaspora and basically be able to capture some of that market share. And the thing is, if you look at the value on a per US consumer base, I think it monetizes at a much, much higher rate, average rate compared to someone like who's in Mexico or even Brazil. I mean, sure, there's high net worth individuals in each part, but in terms of like your average person, I think that the avenue for NuBank to monetize that community is going to be big. And they've started off, they're going to be launching this in 2027, and they're going to start in Florida. And what does Florida have a lot of? Latin Americans, or people from Latin America. So I think there's also like talk about making sure that they're capturing a lot of the business from remittances as well.
I think NuBank is trying to come to US also, aren't they?
No, that's what it is. That's what I'm talking about. They're coming to the US,
So I need to look more into it. I know a lot of people like it. I do want to address Joey in the chat real quick. So, Steve, do you know the person who controls the CME rate hike predictions? Why are you so confident in that? I am so confident in that. Glad you asked. Because if we look at December 2026, which is 7 months away, 1 month ago, oil was still over 85. And there was a 75.9% chance that there were no hikes this year. And less than 1% that we got a rate hike. 1 month later, there is only a 32% chance that we do not get a hike. There is a 0% chance that we get a cut. And there is now a 68% chance that we get hikes. So I am that confident because in a matter of a month, the macro can flip on a dime. If we get a deal in the next couple of days, or even in the next week or two, oil will be below 80 by July 4th, and then gradually go lower as long as the Strait stays open. And when that happens, you'll have several months of PPI and CPI cooling, and the Fed will likely start cutting in September. That's only if we get a deal and oil goes down. If we don't get a deal, I'm going to have to probably agree with CME Group's assessment as of now that we're not going to get any cuts. I don't think we're getting a hike, though. We have seen CME Group change on a dime. You get good news coming out and oil under 80, this is going to flip very quickly. That's why I'm so confident.
Yeah. So let me just I think someone in the chat mentioned that there's a like a Spanish version of Chase, like on the website. Website is different than just having like a mobile app, right? The mobile app is where you're going to see a lot of people
Utilization.
The utilization part. Like
Mhm.
I don't log in to my bank anymore. Like I think maybe once or twice when I need to like download a document or something, but 99% of the time I'm doing all my banking through the app on my phone. That's what I mean by they have like a Spanish native version here in their right here. So if you can see the languages, look, this is for NuBank, right? 1 second. Come on, focus. There you go. So it has English, Portuguese, and Spanish. And if you go to Chase, it has English and Spanish. So I stand corrected. I didn't know that they had a Spanish version. Interesting.
It's very important.
Who has another one? Let me see. Bank of America.
Kris, have you looked into Veeva Systems?
Veeva Systems.
I
have, and I am kind of getting interested. Okay, so there's actually more people that have like Spanish too. Like there's this is Bank of America. They have a Spanish version as well.
I mean, I'd be shocked if a lot of these banks didn't, just given how much of the population speaks Spanish.
Yeah. Let's see. Wells Fargo. Let's see. English and Spanish. Okay. TD Bank. Let's see. TD Bank. That's what I have. I got to switch to Chase. Like my wife has Chase. Yeah, TD only has English. So like the smaller banks don't have anything native. It's mostly the big guys from what I can see. Who else? Which other big banks out there? Citi?
I mean, Citi, Wells. Those are the other two. Bank of America, JP Morgan. They're the 4 big money centers.
Yeah, let's see. Citi only has English. It's kind of shocking to see like that a lot of these guys, like I would have thought Citi, because they do so much business internationally, that they would have that. US Bank is regional. I'm not sure that they'll have it. Let's see.
So Veeva Systems, I have not done the large portion of my due diligence yet. I do like the numbers though. It's being up. It looks like it may be making a bottom. It trades at less than 20 times earnings, $26 billion company. And the numbers look interesting. I mean, they're not a small company. I really need to figure out why they are going down. I mean, they're doing basically 1.4 billion in free cash flow. If I remember correctly, the balance sheet, 6.56 billion in cash. The long-term debt is 0. They have no debt with a ton of cash on the balance sheet, 1.4 billion free cash flow. And the analyst community seems to think it's going to grow by at least 10% on EPS and at least 10% on revenue. So I don't know why it's getting being up. I haven't gone that deep into it, but from a superficial numbers look, it looks incredibly interesting.
I would say Veeva probably has more of a moat than a lot of SaaS businesses. Even though it's more niche, it's a pretty big niche. Like for anything pharma related, you're pretty much going to be on Veeva. So
I think people are worried that Salesforce is going to cannibalize their margin with their data lakes and everything. So I just don't know enough about it.
Well, Veeva is built on top of Salesforce.
They were spin out, weren't they?
I
think they were spun out from Salesforce. I could be wrong on that.
Yeah.
Was Veeva spun out? Hold on. I want to correct myself if I'm not. It was not. It was partnership since 2007. Veeva Systems was founded in 2007 and initially built its CRM platform on Salesforce cloud infrastructure, allowing it to focus on life sciences specific features like call reporting, sample management, territory management, et cetera, et cetera.
Yep. So
and they separated in 2022, and it would not renew its new platform agreement with Salesforce. And now I guess Salesforce is building something to compete, I guess. I don't know.
Yeah. Listen, everyone's gonna try to cannibalize each other.
I'll be
That's just
right
the way.
back.
Okay. Where's Matt? What happened? By the way, did he end up buying that Porsche? Anyone in the chat? Do you guys know if he bought the Porsche? Gotta see. Me, I'm not really a Porsche guy, man. I'm a Toyota guy. Maybe Lexus. Toyota and Lexus is where I am. Kris, any thoughts on quantum? I think it could be one of those things like AI that everyone says, hey, we're doing AI. And for like 30 years, everyone just said, oh, great. Here's that guy talking about AI. And then all of a sudden it's in your face. I think quantum is sort of in the same way, in that if you talk to most people, they're like, look, we're at least 10, 20, 30 years away from anything quantum being, coming out or any value. But Kris is more of a mansion guy. I am not a mansion guy. I am a typical dude. You give me a 10 by 10 room, that's enough for me. Totally cool with it. Like, I just need a bed. I need a computer, maybe a TV, and a desk, and that's it. Like, I can't think of anything more that I need than that.
So I want to go on a rant real quick, and then I want to see what you built.
Okay.
I am eagerly awaiting June 12th.
Okay.
I cannot wait to see the exit liquidity that SpaceX ends up becoming, because I am now convinced that this is what this is. Maybe that's not necessarily fair, but I am just, and I get it. They're leasing out Colossus and Park Colossus to Anthropic. Now people are talking about, did you listen to All In this week?
No.
They're now coining it EWS for Elon Web Services now.
Are you serious? They're actually going to call it Elon Web Services?
That's what Jason Calacanis is calling this, is EWS. I think he said it 5 times on the show. EWS, because they are renting out 1.2 billion a month, I think, of compute to Anthropic. It is now EWS. I would not be surprised if Elon names it that as a joke. And there's now reports that they may be leasing compute out to Alphabet in the future. Who knows? This is big news. There is absolutely a ton of things they can do. And the one thing that we know is Jensen wants his GPUs used. SpaceX has some of the best, if not the best, engineers in the world. Jensen has already said on record that he was incredibly impressed at how they were able to stand up a data center so fast. Now, the question becomes, are they able to stand data centers up and build them out quicker and cheaper than Microsoft, Amazon, and Alphabet? Who knows? Does this give them more firepower for the valuation? Absolutely. The problem I still have is they're not profitable. They don't even do 20 billion of revenue now. Now, maybe after the Anthropic deal, because I don't believe that was in the S1, maybe they get to what, 35, 40 billion revenue next year. Once again, if I put a 50% margin on EBITDA, even at 40 billion revenue, and keep in mind, that's one, it was what, 19 billion of revenue? I mean, you're still talking about 20 billion of EBITDA next year. That's a 2 trillion market cap. I have a very hard time with this.
I'm gonna push you back and just say you cannot use fundamentals when you're talking about an Elon company.
No, you can't. I know you can't.
And space right now is super hot. Look at Rocket Lab. Look at Rocket Lab. Rocket Lab is an $80 billion market cap company. It's bigger than Northrop Grumman.
Hey, I'm part of the space mob, all right?
That's not the space mob. The space mob is ASTS.
No, Rocket Lab is part of the space mob. I'm part of the space mob.
It's not the space mob. It's different, man. Rocket people got to call themselves something different, bro. They could call themselves I don't know. Whatever. But
Chell's got me that physical share.
Really?
That way I could be part of the space mob, Kris.
That's nice. Yeah, I mean, listen, everyone is catching a bid in space. Everyone is rotating, saying, look, the what is it called? The data centers in space thesis is starting to kind of like get into people's heads, and there's a lot of people willing to put money on it ahead of time. And so even if this is one of those things that's not valuable today or doesn't have any revenue today, people don't care. People are like, it's okay, I'll buy it and I'll hold it for 10 years. Like, I'm trying to get Matt to sell, but Matt's like, nah, I'm good, I'm never gonna sell. I was like, okay, Matt.
Listen, Matt's got to do what Matt's got to do, and he's
smarter than us. He's smarter
doing
than
really
us.
well right now. He should do what he needs to do. I mean, end of story.
Do you think being a fundamental investor sometimes gets in your way, or do you think 100%. It protects you?
Dude, of course it does. This market does not care about fundamentals. This market does not care about reality. Look, sometimes I'm about to go on a really bad rant. Sometimes I want a 50% drawdown. So we get all this margin out of here. We get all these triple levered ETFs out of here. We get all the double levered ETFs out of here because the market is too easy for people just to throw a dart, because the reality is NVIDIA should be a much bigger company than it is. Hands down. It's not, though, because my interpretation, the market doesn't want it to be more than 10% of the index on the S&P. There's no other reason why NVIDIA should not be at least 275 today. None. None. Look at the numbers.
Man. I don't know, man. I actually agree that NVIDIA should not be 275 right now, only because their growth next year progressively should be coming down. So you're not going to give it like the crazy multiple. The bigger you get, the bigger, the harder
the actual numbers.
Multiples.
If NVIDIA, we were doing this today, at 216, where NVIDIA is right now, their forward EPS on 2028 is under 14. That's crazy.
I understand that, but there's also cyclicality risk for NVIDIA too, man.
We can't keep saying that. That's
and
not
then what's
true right now.
And then what about 2029? What happens then?
This could keep going for years and years and years. There is no end.
Where's all that, Steve? Where's that capital going to come from? You tell me, please. Tell me how many trillions of dollars that this thing is going to be able to absorb.
Just over the course of 3 months, doubled their RPO. Over 3 months on Google Cloud Services. 3 months doubled the RPO.
Yeah, but that doesn't mean all that money is coming to NVIDIA. You got to remember, Google's
doing
its
not
own
all
training.
of it. But once again, these companies, as in Micron and Taiwan Semi, are not increasing CapEx at the rate they're doing for a 1 or 2 year cycle. NVIDIA is not increasing the dividend by 2,400% if they don't have huge visibility, because that's something they can't walk back. That's not buybacks where they can take a strategic opportunity. We are nowhere near done on this build out. We are still in the infancy. We don't even have robots yet. We don't have full self-driving. We don't have AGI. This is going to go for so long. And be that as it may, NVIDIA at 275 still trades at under 20 times forward earnings.
Yeah.
I'm just saying that the numbers, this is the most incredible quarter we've ever seen in a company. And this isn't me. This is the analyst community saying that this is going to do over 700 billion in revenue in 2030.
Yeah, but Steve, that just means that a 20 PE forward is normal for them. Like, that's like where the baseline should be then. No.
But
what's the current price right now? What's the current price right now?
They're at 216.
So put that in there. So you got a forward PE of in 2027 about 17, right?
Yep.
I think that's pretty much fair value. Maybe it gets to 20.
And Walmart should be 36 and a half.
No, Walmart should definitely not be at that.
I'm just saying. Like, and here's the problem I have with the Elon thing.
But Steve, Walmart's not a cyclical business. You know that. So semis are traditionally a cyclical business. It's hard to get around that cyclicality.
But once again, and it goes back to the question that you asked me, does being a fundamental investor hurt you? Yeah, it fucking hurts me because of shit like this. Because if you go by the actual fucking numbers, there is no reason why Tesla should trade at 223 times this year's earnings and NVIDIA at 24 times when NVIDIA has more forward growth over the next 2 years. Yeah, there's zero reason.
But Steve, come on. We both got caught up in this with
zero.
Palantir. We both got caught up in this with Palantir. I mean, look,
I'm a shareholder of Palantir. I've done very well in Palantir.
I know, but I'm just saying we both got caught up on this with Palantir too. You know, like when it comes to valuation, sometimes we can't be, and this is something that we both have to learn over time.
Palantir doesn't make any. I mean, Palantir makes more sense today than it did, but on the way up, it made no sense.
Yeah, when it got to 200, it was just like, what the F?
I mean, I was saying that it's going down. I was one of the only people that was a bull that was saying this is bullshit. This is going down. But
yeah, I mean, that one was just like you're basically compressing 5 years worth of earnings today. So you're basically paying what the company should be in 2030. You're paying that in 2026. So you're like, you're probably going to underperform, but no one cares. No one wants to care.
How about this?
That's this thing.
This is why being a traditional fundamental investor sucks. Let's just look at Amazon versus Walmart. Okay. Everybody can say in hard times, people go to Walmart, and during a recession, people still have to eat and they need toiletries. They're going to go to Walmart. Cool story. I can get almost everything on Amazon also. Not to mention, Amazon has an advertising business that just did $17 billion this quarter. Amazon has Amazon Web Services. They also have their freight logistics that they just opened up for third party. They also have double the growth of Walmart over the next 2 years, yet it trades at a significant discount. For what reason? Like, all right, we don't want to put NVIDIA against Walmart. There is zero, like negative 100 reason why Walmart should get a bid over Amazon. There's not one reason.
Maybe there's something that we're missing that the market's recognized. I don't know.
I think the market's just stupid. And I get it. It's the market. The market's always right. So I'm the stupid one. And I fully get that.
That's not true. That's not true. The market's wrong a lot more than it is right.
This is an inefficiency.
The market is wrong a lot more than is right. And if the market wasn't wrong, we wouldn't be making any money. If the market was basically like everything is fundamentals, you just apply this multiple, then, you know, and
I wish it was.
No, that's not how it works.
How easy it would be at that point?
Actually, no, to be honest, Steve, it's actually easier that the market is stupid. Like when regional banks were trading below book, that was an easy play to make.
Right. We both did well on Truist.
Right. You know, we did the same thing with SL Green. Remember when SL Green was trading below the value of replacement?
Again the other day.
Right. But we did well. When Verizon was trading at freaking $30, that made no sense that you have a company like Verizon that does that much in free cash flow sitting at $30. Now what happens? Goddamn thing retraced to 48. No,
just explain this to me. Explain this to me, how Walmart and Costco can still trade at such a bigger valuation than Amazon when Amazon has AWS advertising and they're about to take out FedEx and UPS. How is this possible?
Maybe it's a discount because Amazon is just really, really big. I don't know. Maybe the other thing is maybe the shareholder base in Walmart and Costco have been there for so long. They never sell, so the float might be just too thin. I mean, you have to look at the data.
That's a good point. My father and I have discussed that. Like, who the hell sells Costco?
Yeah, like no one wants to recognize that capital gain. A lot of people are using it as defensive too. So
like,
if anyone
who sells Costco,
second,
like who sells Costco? You're right. Like maybe it is that thin, and maybe it's that simple that it's just stuck there because it's so liquid because nobody wants to sell it. And it's a bunch of people that have held it for decades.
Yeah, and anytime it goes down, they just buy it. So I mean, there's companies out there that are like that they're not going to trade on fundamentals. They're just those stalwart positions that people bought 20 years ago, and now they're just sitting on that enormous wealth and they're just borrowing against it and living their life. You know, can you blame them?
You want to see something crazy?
Sure.
Amazon's balance sheet. So I went through this whole exercise and I made a really mean post on X the other day. They have $143 billion in cash and short-term investments.
Who does?
Amazon.
Yeah, but they also have debt against it, no?
143 billion. Their debt is 127. Check this out.
So what's the net debt?
The interest expenses is only costing them $2.5 billion. Their interest in investment income, $4.45 billion. How crazy is that?
What's shocking about it? They make $2 billion in interest.
No, but the spread, they're funding these debt servicing and padding their balance sheet. It's amazing.
Well, yeah, they benefited from the low rates. Like Palantir is kind of I'm telling you, there's so many companies right now. They have so much money on the cash side, and the cash is giving them 4 or 5% because they're in short-term treasuries.
Yep.
But the bonds that they issued are like 2% and 3%.
It's amazing.
So a lot of people it's funny. I was actually researching Charter Communications because I think it's like a really, really big value play right now. The thing is, no one really looked at the debt that they have. They just look at like the total debt. They're like, oh my God, they have 90 billion in debt. Ooh. And I'm like, okay, but did you look at the rates? A lot of that debt is cheap debt. A lot of companies have a lot of cheap debt on the balance sheet. So there's no reason why they should be paying it down. Even if their net debt to EBITDA is like high, let's say it's like above 3.5.
It's only about 4.5. That's not crazy.
Right. And especially for a business,
that's crazy.
Right. And especially for a telecom business, that's fine. It's not like if you look at their net debt to EBITDA over its historical period, it's always been around that four mark anyway. The crazy thing is a lot of people will keep citing that debt. And I have to ask myself, is it good debt or is it bad debt? Because good debt is you have 30 years out and you're paying 3%. Why the hell would you pay that down? You wouldn't. You'd keep that shit until the end of time, until that maturity actually came up. You'll never be able to get that kind of financing. So
it's pretty wild.
Yeah.
It is pretty wild. So you went down the rabbit hole of Claude.
Yeah. So one of the things.
What did you learn? What are your thoughts?
I think it's a very powerful tool to customize things in a way that gives you a lot of. Hold on, let me just show everyone what it looks like. Okay, so there you go. So this is what it looks like. So we can take a look at something that I already.
Before we do anything, Kris. I don't want to show your IP address on your top.
It's not. It's just my local host. You
sure?
Yeah, it's not going to show anything.
Okay.
My local host is only accessible to me, so it's fine.
No, I just want to make sure your IP is not going to show. That's all.
No, it's not showing up there. It's fine. So you can see here, this is Fiserv, right? One of the things that I really like when I deep dive into a company, I want to actually look at the debt and I want to see like, okay, well, how much debt is actually coming due? And one of the things that I always don't get to see is a great visual representation of the company's debt structure. So one of the things I did was I built this in Claude Code to see like, okay, what kind of balance sheet do these guys have? So you can see here, this is the enterprise value of the company, and about 50% of it is equity and the other half is debt. And you can kind of drill down on the debt and you can see like, okay, they have, let me just make it bigger so people can see. So you can see here, most of their debt is long-term debt and this is short-term debt. And so, you can go through everything. You can see like how much debt is actually coming due, what the cost is. So their effective interest rate right now for their debt is only 3%. So a lot of people will look at the debt and be like, oh my God, 50% of this company is just debt. And I'm like, yeah, but it's good debt. It's only 3%. Now, one of the things that you can actually do with this is actually set up a trend and look at the trend. They took on a lot of debt around here post-merger with First Data, and then they were buying back a lot of shares utilizing debt, their last CEO. So their debt went up. So their net debt to EBITDA actually started to rise significantly. So you see net debt to EBITDA went up right here when they borrowed money for first data, and that kind of went down, and it's been trending a little bit higher. So you can see here, this is when they were issuing a ton of debt. So they issued a lot of debt in 2019 when rates were lower. And then over the last 5 years, they've been issuing debt to finance their share buybacks. Now they were generating a lot of EBITDA. So, they were able to kind of like weather this additional debt without any issues. But right
Let me ask you
now,
this. How much of this did you build out? So you, for instance, you built the initial feature out, then you're like, oh, I want this, then oh, I want this. Is that how this went for you?
Yeah, pretty much. Yeah. Now I also have maturities profiles right
That's
here,
cool.
so I can see
I like that.
all of the debt that they have and what kind of like how much of that debt and what the current rate is. So you can see here all of this stuff is fixed rate debt. So you can see here they've got debt in 2030 that's fixed at 1.6%. That's euro denominated. You've got other debt here. Some of that's floating. But yeah, you can actually drill down on every single one of these things and see like, okay, in the next 24 months, you've got $4 billion in debt coming due. They've got in cash flow plus existing cash on the balance sheet almost 9 billion together. So they can address this debt without any issue. Now, if you have a company who's got a lot of debt that's coming up and they don't have enough free cash flow, that means that they're going to have to tap the debt markets a lot more. And here you can kind of run what the interest is going to be. If you kind of say like, okay, what the like if interest rates go higher, what is the price if they have to refinance the new debt? How is it going to impact their annual interest expense? And one of the things I actually did that I'm not sure if you did, I used DeepSeek Pro instead of Claude Opus 4.7 to do the extraction, because a lot of the benchmarks that DeepSeek Pro has are similar to 4.7, but DeepSeek Pro is super cheap compared to Claude Opus 4.7. So in terms of building everything, I use Claude, but in terms of the extraction tool, it's coming from DeepSeek.
So I broke Kris down and convinced him to get the API I was using. And I have a feeling that when in 2 weeks from now, this system that he built is going to be drastically different. I think you're going to add a lot of things to it.
Yeah, I mean, I'm definitely going to try to, like, I like your platform, but the thing is, like, I feel like it's got so much going on. I'm going to try to keep this as niche as possible so that, it's not like you're drowning in information. This is another thing that I'd highly suggest you just ask it to create a light and dark mode so that this way, and it didn't take very long. Like, I just looked at it, I was like, huh?
How crazy is it that like you just say build this and some of the stuff it'll do in legitimately a minute or two?
Yeah. Then you've got all the peers, like what the other peers that it has, like what their debt to EBITDA is. So you can kind of weigh it against it and see what kind of multiples they're getting. And if they're getting a certain multiple, if they're especially in an adjacent industry, you could. Now, there are challenges with this thing. Okay. So I'm not going to say that this is like the best thing ever. One of the things that you have to be very careful of is initially when I built this, the accuracy was off. So even right now, one of the things that I wanted to do was I asked it to show me this dashboard, but I wanted to make it bigger sometimes, so I wanted to actually click on it and make it big. Right now, it's not working. I don't know why it's not working, but usually what you want to do is be able to click. And when you click on it, it actually, like blows this up. I don't know why it's not working right now, but I'll figure it out. And what you can do with this is you can actually, like I have like a slider bar, so you can kind of see, like you can reduce it down to how many years you want it. So if you want to do, and I actually have it broken down like on a per quarter basis. But like I said, the goal here is to try to make it as simple as possible so that if someone does want to utilize this, and eventually I'll figure out how to give access to this to people, to basically not have to dig through like the entire giant UI. Now, there are a couple of things that I'm going to have trouble with this, though. Number one is the caching feature. I wanted to auto cache like 1,000 companies right now and extract everything. Huh? because
So
then it's a quicker load. Like right now, I already did Fiserv before, so it's loading right away. Now, if I go to, let's say
put
I go back,
Amazon in.
right? I've done Amazon. So give me a name on a company that's like very out of the world.
AT&T. Definitely
Okay,
did not do
so
that.
T. Yeah, I didn't do AT&T. So I can go to this. And so the initial stuff is going to come up really good. Like the API does a really good job of giving me this data, right? The challenge is when you go to the maturity calculator over here, it's going to break for a little bit, because what it's going to do is it's actually going to go to the 13Fs, like the quarterly things, and actually get the data and run the extractor and get all of that, because it's not in the cache right now. You see how when I clicked on Fiserv, it opened up right away? This is not there. Now, here's the thing. I can use Flash. I can use like a Claude Sonnet Flash.
So what? All right, no, I get what you're saying. So what you could
But
do,
the accuracy on Flash is not that good. Like DeepSeek Pro has high level of accuracy. I didn't get the same level of accuracy on the lower one. So if you use a Flash model, you don't get the same thing. You get it more, so it'll eventually load, but it's going to take time. It takes about 3 minutes for it to do the actual extraction and put it
I
on here.
wonder if you can because they update every quarter. If you can have it pull down all the companies in the S&P or all the companies in the Russell 1000 and store everything locally in a subfolder and have
Yeah.
that be the backbone of it. That way it just, and then have it on an overnight build, feed
Yeah.
everything into
There
the
you go.
system and build everything out on the back end.
Yeah.
You
So now
probably,
now the extraction is done, and now I have it right here. So you
no.
can see, but it was not able to get the coupon type and maturity right now. I don't know why it wasn't able to get it, but you can see here, like fixed note 0.0 to 2.9, probably because the filing wasn't nearly as, that's the other problem with debt also, in that debt has a way of, it's not as simple as this is the exact amount. So right now you can see here the notes and debentures that they've mentioned from 2025 to 2095. There's 5% to 699. So the filing does not actually show every single one. So I don't know how to make sure that this is properly put in there, but you can see the deviation, like right here, carrying amount is below this. So it's not as clean. So this is where you need someone to do all the cleanup of that actual filing and make it something that's actually usable. The
Well,
good thing is the other parts actually work. Like the trend part works because you're looking at the raw absolute debt, but yeah, it's not nearly as clean.
what I would suggest you do tonight is
Mm-hmm.
before you go to sleep, tell code to audit everything you built and create a
Mm-hmm.
markdown file for you in the morning. And then
Yeah.
when you wake up, feed that into chat and say, code just audited the entire system, read through the markdown file and figure out what we can improve.
Yeah.
And you're going to do, you do that a bunch of times, it will definitely make it quicker, better, and it'll fix bugs that you wouldn't have even thought of.
Yeah. This is the challenge with a lot of companies, man. Like when it comes to like equities are very transparent, but a lot of businesses, they have like debt and they hide critical information in their debt that like you don't necessarily know, right? Like and the way that it works is that if this happens, then this is your debt. If that happens, then this is your debt. And if something else happens in the future, this is how much is due right away. And if that doesn't happen, then you don't have to worry because there's like a covenant that has like acceleration clauses. Debt is one of those things that's like, it's going to be a lot more complicated. And this is one of the reasons why I don't think there's a lot of platforms out there that have debt. They have a lot of stuff for equity because equity is very transparent. Like, you're going to see earnings. They have to report everything. But a lot of the debt that's being reported, it's very like, I don't even know how to describe it. Like we can take a look at this just as a human. Let's see. So this is AT&T. 1 second. So let's look at the SEC filings. They actually have an entire stack for their debt. So instead of looking at the 13F, this probably would have given them a much better and cleaner
Yeah, the
setup.
AT&T keeps on their website. Same with Verizon.
Right. So this actually would have been better for AT&T. But if you go to their 13Fs, I'm pretty sure like the 13F probably cites this thing. So let me just see 1 second. Share. Events quarterly. And we can go to financial operations schedule. Okay, let's see. Actually, I want to see the filing, man. Let me see. This is why I do fiscal AI. Let me just share the entire screen. Sorry, so I have to keep going back and forth. So if I go to actually this T, and I go to their financials, actually I need their research or investor relations. This is the quarterly. This is the slides. I actually need their filings. 8K right here. I need the 10Q. So this is all the debt that they have right here up front, and then there's like probably a debt schedule. Okay. Yeah, they have a lot of debt, but I guess yeah, they have like it's a lot more. Yeah, this is probably one of those things. All right, I'll have to figure this out. So the data sources. I wonder if there's any sort of like if S&P Global or FactSet has more accurate.
FactSet has a lot of APIs.
How much do they charge for?
A tremendous amount of APIs, Chris.
Yeah, like trying to do a manual extraction of all of this stuff is probably like
no. Because then you're going to have Claude build a scraper, and it's just not. It gets crazy. Too much room for error. FactSet has APIs. They're just they start adding up. I can tell you that.
Okay. Did you get FactSet?
I looked into it. I looked into a couple of them.
How much was it?
We'll talk offline.
Okay. All right.
So I had Claude go through SpaceX's S1. And I said, go through SpaceX S1, rip out the numbers, and build me the valuation.
Before anything, let me just thank H-Links Golf Pro. That is a good idea. I will take a look. Thank you for that. I'll take a look.
What do they say?
No, it says scrape FINRA's fixed income website. FINRA, yep. SEC might also have it too, but the problem with the SEC web, like trying to get everything from the SEC is, it might be doable. Like I said, I'm still learning.
So it built it out. Base case, multiple bases, 10x revenue on space launches, 22 times forward EBITDA on connectivity. It's saying the implied equity value after net day and IPO proceeds, $749 billion. Range, 400 billion bear, 750 base, 1.3 trillion bull case, which sits meaningfully below the rumored 1.75 to 2 trillion IPO target. To get there, you need Starlink at 30x forward EBITDA, AI segment near 700 billion plus, or future markets worth 400 billion plus in present value. Probably need all three. I mean, I don't understand why the hell this is being so respected. Like, am I crazy? Everybody in the chat, am I
Wait.
crazy?
Trace that guy H-Links Pro is right. There is a fixed income API for that FINRA has. Okay, cool, man.
Nice.
Thank you. I
So
appreciate
now
it.
have code hardwire that in.
Yeah. I'm gonna try it out tonight.
I mean, is the Elon multiple really worth this? I don't get it. And it goes back to me being a fundamental investor at heart. Is paying $2 trillion for this even realistic? I don't know. This seems stupid.
I mean, look, man, Elon is gonna get the Elon premium. He knows that.
Kris, 1.13 billion in adjusted EBITDA in Q1. Q1 operating cash flow 1 billion. So on a run rate, that's $4 billion of ops cash, and you're paying 2 trillion. Like, I don't get it. I don't get it.
Equity, FINRA, let me see. Fixed income, it's limited. Okay, cool. Firm.
I love that. Mick Burger, that's amazing. It's Elonomics.
Elon knows.
Right.
All right. Well, my wife got some food for me, so I am
Go
gonna
enjoy.
head out in a little bit. Tomorrow or Monday.
Monday.
Any specific companies?
Yeah,
or
I
any
want to go
specific
through
things you want
Charter
to
with
talk
you
about?
on Monday. Charter.
Okay.
I'm going to do my research on it.
Do the math. You'll
Yep.
see it's trading at such a low multiple. Like, it's crazy. Now, it's a melting ice cube, but it's not. There's things that we'll talk about. So
Yeah.
take a look.
I'll do my
All right.
research.
Sounds good.
All right. Later,
Later.
Kris. All right, everyone. I can tell you that I am a little crazy with the whole SpaceX valuation. I don't know. I don't know. It doesn't make any sense to me whatsoever. But hopefully it works out for everybody. Hopefully it works out for everybody. So let's do this. Let's just do an AMA for a little bit. Stay on for like 15, 20 minutes. I'll answer whatever I can. And then I'm going to get going. And then members only tomorrow at 1 p.m. I will make the link tomorrow morning. I'm too lazy tonight. Oh, Nate is in the chat. Nate, why are you? Hold on. I got to do it on YouTube, Nate. Hold on. Have I bought any Pokemon cards? I have. I bought Chaos Rising, the new box. One sec, everyone. All right, there he is. Oh, Hollis, I can put you in timeout from YouTube. That's hilarious. Absolutely hilarious. Thoughts on Iran. I mean, listen, Nate talked to me. I put the video out. I'm still a Nebius guy. I mean, I shouldn't even say I'm a Nebius guy. I don't own a lot of it, but I am a shareholder. But there's a reason I picked Nebius over the other two. Oh, you didn't do anything. I'm just saying that when I went to make Nate a moderator, I saw that I have the ability to put people in timeout. I thought it was pretty funny. So it made me think of you. But I am going to ask my wife if she wants to do the Bourbon Trail, Hollis. That way we have a chaperone. So we make sure that we don't get into too much trouble. Everyone who tested Facebook forum says no threat to Reddit. Thank you very much. That makes me feel a lot better. I mean, I hope, I'm not going to really go through, we went through at the beginning of the show. I hope that this war ends soon, because I do not want 90 million people without power in Iran. So favorite bourbon, I mean, listen, Scotch, you will have me sounding snobby. Bourbon, I'm a Buffalo Trace guy through and through, man. You can give me Weller, you can give me Blanton's, you can give me all that stuff. Give me Buffalo Trace, I'm happy. Buffalo Trace is just so damn good. Resna, thank you so much. Really appreciate. The valuation is nuts, but in the meantime, on Hyperliquid, there are pre-IPO short-term trades to be had. The market has shown for a while. Valuations can be disconnected from fundamentals, up or down. Absolutely, you can. Sergio, thank you, man. Really appreciate it. Definitely more relaxed. I feel great. Thank you so much. Really appreciate it. Yeah, Buffalo Trace. And I will shout these guys out. I don't know them. I've never interacted with them. But I will tell you, if you like bourbon, okay? I have been watching these guys for a long time. They are the bourbon junkies. And I will tell you that their content's awesome. So if you like bourbon, I would seriously suggest checking them out and throwing them in your rotation. I think they're great. Why am I not subscribed? Just goes to show you that I've watched over 100 of their videos, and I probably sent in text messages many of their videos to my friends, and I don't even know why I wasn't subscribed. I guess I thought I was. I was. Buffalo Trace Distillery does make Blanton's. They do make Weller. They do make Eagle Rare. They make a couple of other ones too. I like Buffalo Trace. I like what I like. Biggest winner in 2026? I have no idea. I have so many positions. I'd have to look. It could be Corning. What's Corning up this year? I feel like Corning is doing really well this year. Hold on. GLW. Yeah, Corning's up 122% year to date. That's definitely up there. I mean, that's that has the potential to be my best. I just bought Micron. I wasn't in Micron for that long. I've legit been in Corning for years. I will answer this. What have you learned since leaving your day job? Any big takeaways and learnings? Yeah. One, never think that the company will crumble. Not that I thought this, because I gave them 5 weeks notice to put them in a position where they wouldn't crumble. But don't think that a company will crumble if you leave. And two, don't leave your job unless you have something already figured out and you're in a situation to do so. I didn't leave my job without being set up to do so. So don't just decide, screw it, I'm going to leave. Yeah, listen, everybody's replaceable. They may have split what I did across 5 people and hired somebody, or in the process of hiring somebody, but you know what? Life goes on, you know? Life goes on. I can tell you I do not own Fuel Cell or CGEH. I don't even know what that is. Yosh, I mean, listen, if you can do it, you can do it. You know what I mean? If you can do it, you can do it. I have not visited the farm. I don't even think I'm going to make it tomorrow. My wife's going to have to make it. Give me 1 sec. I got to send this to Hollis. Hollis, check your phone. Look, I even though Nate was able to give me a very big education, I still don't feel confident discussing CoreWeave versus Iran. Did your old company try to get you to stay? Yes, I guess I can say it. They made me a pretty big offer to stay. I said no. They asked me to consult. I said no. They listen. I left on very good terms. I just wanted to do something else. But yes, we left on very good terms. I mean, if you own CoreWeave, Nebius, AMD, NVIDIA, Broadcom, you're doing pretty good right now, Yosh. You are doing pretty good. Yeah, don't burn bridges. Burning bridges is not, it's just not smart. You never know when you're going to need something, or life is funny like that. Don't burn bridges. I'm against it. My own opinion. Cheering for anybody in the Stanley Cup? No, I don't really watch hockey, and I don't watch hockey the way I used to. I'm an Islanders fan. That's all there is to it. Now, I can't tell you if you missed anything. I got no idea. No, my thesis on Ethereum has not changed because my thesis was a 5-year thesis. Is it cooking right now? What's it doing? Ethereum is not doing anything. It's at 2118. No, I'm a fan of 5-star resorts. Not camping. I like AC. I like hot water. I like room service. I like walking downstairs to a steakhouse. I am with you on St. John's. Patino, baby. Patino. I'm excited for next season, baby. Rick motherfucking Pitino. I'm ready. Whoever their media team is from last year, oh my God. That St. John's music video that they made was incredible. Okay, hold on. Is this true? I have had Truth Social open. I haven't seen anything. Trump has not said anything except for bitching about Democrats. So I'm not sure where you saw this. I'm going to go to Reuters and see if they have a. Reuters does not have anything new. So if you seriously, if you do have any information, link it and I'll bring it up. I'm not seeing anything. Actually, let me go to Cactus Jack. Oh, I should have thought about that. Cactus Jack. Iran agreed to give up enriched uranium in the deal, Trump announced, U.S. officials say. So that was at 9:37. No, I'm not buying silver. I have silver. See, Hollis, I had a feeling that was something that you were going to say. I didn't even know that. I just sent it to you because when I went to show that page, I figured you'd be interested. What's everybody doing for Memorial Day? I am going and barbecuing. And yes, I'm a very big Don Manley fan. Huge Manley fan. Huge. Working, barbecue. Indy 500. Yeah, hold on. So this is the thing that Amit put out, Cactus Jack. Filing a federal lawsuit against a former employee Tuesday. I want to know more, but do not say anything, obviously, but I am intrigued. I'm not really sure what I'm going to be cooking. Probably steaks, burgers, and hot dogs, and chicken. Desi, depends what you want. You talking about for financials? You're talking about finance. I'll tell you the same thing I told Kris. I love FMP. I think it's great. They are not a sponsor. I have no affiliation with them. I happen to like FMP a lot. Of course, with milk. Need my big glass of milk, strong bones, according to Ray and Michelle with the Pokemon cards they got me. Listen, milk does a body good. Don't hate on the milk. Drink beer and watch Badlands. Nice. Least favorite flavor of milk? I didn't know milk had flavors, Star. Do you mean percentage? I mean, let's just go down the line. Skim milk is like water. 1% is like water. 2% is and whole milk is where it's at. Gardening and learning about day trading. I like it. I really want to learn about day trading. I just don't have the damn time. I got to figure out how to make time in my life. Okay, maple milk, chocolate milk. Now I'm with you. Don't sleep on the maple milk. I'll tell you that. Holy shit, the maple milk was good. Rambler, yeah, it's something like that. This place I go to, Ronnybrook Farms, they make maple milk once or twice a year. It's pretty crazy. Honey on top of that vanilla ice cream. Yeah, honey and vanilla ice cream is good. Me personally, I like caramel. I'm a big caramel person. Big, big, big. I've done a little bit of research on tokenization, not a tremendous amount, a little bit. I mean, don't get me wrong, Chips Ahoy is good, but I'm a big Pepperidge Farm Montauk person. I'll fresh baked always wins, but I mean, come on. Those Pepperidge Farm Montauk chocolate chip cookies. Now I want to go downstairs and go get some. Thank you. Okay, Rambler knows what's up. Van Leeuwen ice cream is so legit. So legit. Oreos are crack. I'm with you on that. Really? You've never been a fan of Pepperidge Farm? What? How? I don't understand. Hold on a sec. This is blasphemy. How are you not a fan of this? Like, Pepperidge Farm is legit. Montauk milk chocolate chip cookies? I mean, come on. This is legit. I will agree. I like Tate's. I'm a fan of Tate's. Teriyaki chicken a couple months ago. Me too. And I don't have any cookies up here. But you know who has cookies? The store right downstairs. How warm is it? Still raining? It's 51 degrees. It may or may not be raining right now. Question is, do I want to walk downstairs? I kind of feel like walking downstairs, but here's the problem. Diana, here's the problem. If I walk downstairs, I may be walking across the street to Dunkin' Donuts to go get a double chocolate donut because I've been fiending for one. And on the way back, I may get cookies. Not good. I'm a bad man. When it comes to junk food, I am a bad man. Yeah, dude, I live in New York City. I can walk downstairs and there are things still open at 11 on a Sunday, on a Saturday. Oh, I got a question for all of you. I enjoy this, hanging out with all you guys, not talking about finance, bullshitting. Did anybody watch the new Jack Ryan movie that came out on Amazon? Anyone? I salute you. That's amazing. That's amazing. Love it, love it, love it. I sometimes drive, not trying to go crazy here, but I sometimes drive an hour and a half to go get pie. Believe it or not. Striper, if you're here, pretty sure you know about this magical place. Sometimes I'll drive an hour and a half to go get pies from Briarmere Farms. Click here for the daily pie list. I will tell you this. They're expensive, but these pies will change your life. They are not what you're thinking. They are those thick boys. Those thick boys. Thick boys. So I would say this, in my opinion, is the number one pie you can buy. I'll put Briarmere Farms up against any pie. Then Jericho Cider Mill. Jericho Cider Mill may have the best apple pie you've ever had in your life. I'll tell you that right now. If you like apple pie, the Jericho Cider Mill is so damn legit. Oh, and the frozen apple drink that they have there is the frozen apple cider is insane. It's absolutely insane. Do they have like pictures here? This doesn't do it any justice. They should have a gallery. Why don't they have a gallery? Next time I go there, I'm going to tell them they need a gallery on the website. Who do they think they are? This is legit food porn if they had a gallery. I will tell you that right now. They don't have a gallery. That's not okay. Yes, it's by the Milleridge Inn. It's right around the corner. It's right on 106. Geez, what part of LI are you from? It's legitimately right around the corner from Milleridge Inn. Can I be your 10th nephew? I need to approve. Listen, I'm a expert in apple pie. Expert. Blueberry pie, apple pie, raspberry and blueberry combined. Expert. You know how bad I am? You ready for this? I keep a huge thing of Ready Whip in the fridge, even though I have no pie there. Huge thing of Ready Whip. I'm so bad. What is needed to join members only? Look, I never ask anybody for anything. I did put a tier on if you want to support me. You can. If you support me, you get access to the members only stuff. Actually, let me see if I have any. I don't think I have any free subscriptions that I can give out. Hold on. I don't have any free subscriptions that I can give away. They reset every month. But next month I will be giving out 10 subscriptions. Love it. Love it. Love it. So Diana, this is what we need to do. When Amit gets around to getting the Texas meetup going, you're going to have to bring a pie. I mean, it's as simple as that. You're going to have to bring a pie for us. Do they do key lime? That's a good question, but I'm going to say something. Nobody's going to have a better key lime pie than Jack's Stone Crab down in Florida. Nobody. Think they're on Military Trail? I think. Hold on. I said Jack's. I'm sorry. Joe's Stone Crab, I think. Hold on. Is this the one I'm thinking of? Yeah, Joe's Stone Crab. Yeah, their key lime pie is insane. It's insane. Do you, Hubbers? Nice. We're doing I think we're doing Miami next year. Yeah, Joe Stone Crab. Yes. They're key lime pies to die for. Michael, thank you so much for joining. Really appreciate it. Call Tanner. I'm not calling Tanner. It's 10:55. Tanner's probably laying there with his red light therapy right now, having his bed massage him, trying to get in that optimal sleep condition. We can't disturb Tanner. Listen, you know why I shut down the Kentucky Derby. I'm a little afraid of going to the Derby with Hollis, to be very honest. Like, we would 100% need a chaperone. We need a chaperone for the trail, let alone the Derby. I love that. I mean, Claude could be a good chaperone. I have no idea who's winning. I'm not. Where's Tommy Dimes been? I feel like something happened to Tommy Dimes. I haven't seen him in like a week and a half. I'm gonna reach out to him. I'm gonna message him and see if he's all right. All right, we're putting an APB out on Tommy Dimes. Yeah, Diana, I need a supervisor too. That's why I got married. Amit's rants are funny. Yeah, I'm thinking about doing a rant video a couple times a week and just going off. I don't know, we'll see. I got some stuff that I want to get off my chest. There are some things about the market I want to get off my chest. And I think I just have to do an unfiltered rant about them. I mean, I would say 275, but who's counting? I'm going to make a video for tomorrow. For NVIDIA. So we'll see. We shall see, everybody. Yeah, Mitt's rant was 100% justified. I mean, we could do a rant montage. That'd be pretty funny. Lena, what's going on? Were you getting your steps in like Chels? I can't believe Chels went to the gym 2 times today. Superstar. Absolute superstar. Don't do that, Matt. I sent the link this time. Don't do that. You were out. Knicks are looking good. Matt was at the Lambo dealer. He may have been. We know he went to a Porsche dealer today. Lena, thank you so much. Really appreciate that. I think Anthony Noto's a little bullish. Just saying. I think Noto's bullish. Yeah, I'm a little scared of the Spurs, to be honest with you. I know a lot of people like OKC, but I'm scared of the Spurs. Wemby's such a stud. Thank you, Diana. Really appreciate it. No hints. Very sorry about that. No hints. It'll be out very soon, next couple of days. Don't you worry. I did, Lena. Matt, why are you making fun of me? What's going on? All right, we're going to end it with this. Diana, I almost fell out of my seat when he said that. I almost fell out of my seat. All right. Jack Ryan versus Jack Reacher. So hard. They're both very good. I did watch the new Jack Ryan movie yesterday. It was awesome. I don't know, man. Reacher's so good too. I don't know. I'm going to have to get back to I'm going to sleep on that one. You guys finally asked me a question that I can't answer. Okay. Jack Bauer is on a different league. Jack Bauer's on a different league. Let's not bring Jack Bauer into the conversation. Bauer's on a different level. If you had said Jack Bauer from the beginning, it would have been Bauer. I'll even say Bauer over Bourne. All right. I'm going to have to get back to everybody tomorrow. I really don't know. Bauer. I'm sorry, not Bauer. Reacher or Ryan. This is how I'm going to settle it. I'm going to go watch the first episode of Jack Ryan right now. I'm going to watch the first episode of Jack Reacher tomorrow. I'm going to get back to you with an answer tomorrow. Really good question. Really good question. Thank you, everybody, for joining and hanging out on this Saturday night of this Memorial Day weekend. Members only tomorrow at 1 o'clock. I will absolutely put a link out. Don't you worry. 1 o'clock tomorrow. Members only. I don't know. We'll probably do a stream tomorrow night because the market is not open. And since Amit will not be streaming, I will probably do something tomorrow night for all of you. And we'll go from there. Appreciate all the support. You guys are the best. This is why I do this. Thank you very much. Hollis has jokes. And I'll see everyone later. Have a great night, everybody.